Hello friends, welcome to one more video on your favorite YouTube channel Exam Prep. Let me tell you that on this particular channel you would have seen various videos which are about multiple choice questions related to exams conducted by IIBF, that is Indian Institute of Banking and Finance, and NISM, which stands for National Institute for Securities Market. Some of my videos also deal with the conceptual understanding of some of the key topics related to these exams. But this time I am doing something completely different. Based on some emails received from the viewers, I have decided to prepare a video on careers in treasury management. I am sure most of you know that treasury is a sought after career option. Many youngsters as well as those who have experience aspire to work in treasury domain. So how can you build career in treasury management? In this video you will get to know some of the key aspects of career in treasury management. Based on the feedback received from all of you, I will make another video which will have detailing of some of the aspects of what you are going to see in the subsequent slides. So let me start by telling you that when we talk about career in treasury, we have to understand that treasury has two key aspects in terms of career scope. One, you can join corporate treasury or treasury of various companies which operate across the country. Let me give you an example. If you are in India, you can join treasury of, for instance, Reliance Industries, ITC, Larsen and Toubro. All these are what I will call as corporate treasury. Now, corporate treasury is an integral part of the finance function of any company. But you have another option where you can join treasury of a bank or a financial institution. Now, as far as banks and financial institutions are concerned, treasury plays a much bigger and critical role compared to a corporate treasury. However, the role of corporate treasury is something which continues to be important. I am just doing a comparison, and the next slide will help you understand why the corporate treasury and banking or treasury in banks are different. So let me take you to the next slide. So you can see that if you are part of a bank treasury, there are certain statutory requirements that you have to fulfill, which means a bank like State Bank will maintain the reserve ratios, which is done by Treasury. So maintenance of SLR, which is statutory liquidity ratio, CRR, cash reserve ratio, LCR, liquidity coverage ratio. Such ratios are basically something that all regulated banks would do, right? This may not be applicable for all the financial institutions, but definitely applicable for banks. Financial institutions such as non-banking finance company may maintain LCR, which is liquidity coverage ratio. So some of the ratios may still be maintained by them. But corporate treasury is under no obligation to maintain such ratios because they are not a lending institution. In corporate treasury, cash management is very important. I am sure you have read about the fact that uh, under the current assets, companies have various types of current assets, and cash and cash equivalent investments, trade receivables, all those are part of your current assets. And working capital management hence is very important in a company. It's also important in a bank, no doubt, but very critical for a company because it's the lifeblood of that company. So what do companies do? Companies continue to monitor whether they have excess cash, when is the cash going to come, where it is going to be spent. All that is done by the corporate treasury. A similar function is performed in banks also, but probably given a more technical name in terms of the banking and the financial institution world. It is called as the liquidity management. Corporate treasury would do risk management functions also, which means it takes care of the risks which may be faced by a company and helps in that broader achieving broader objectives of risk management. Let us not forget that there is an ERM framework in place in most of the companies, and that broader ERM framework helps them to protect risk. But when it comes to banks or financial institution, the point to be noted is that risk management is again driven by some of the frameworks that you have, particularly the Basel framework, or the Basel framework as some people would call it as. Foreign exchange dealing in a corporate treasury will be done based on the business requirements. That's very important to understand. So if you're a small company, have only local business, don't deal in foreign exchange, probably you are not going to do much about it. But a bank or a financial institution can be an authorized dealer as per the FEMA. FEMA stands for Foreign Exchange Management Act. So foreign exchange is a very important function in the treasury in banking, because banks are given license to act as authorized dealers. A corporate typically is not an authorized dealer. Of course, we have full-fledged money changers and some other entities which are eligible, but broadly corporate will not fall under that. Next point that we need to understand is that if you are a bank, you can directly participate in the bidding of securities, which is done by Reserve Bank of India through a competitive bidding process, which means you can quote both price and yield as it is applicable. As a company, you can only participate in non-competitive bidding, which means that you cannot quote price or yield. You have to just accept whatever is the cutoff price that RBI fixes. Now, raising of resource for company, whether it is IPO or short-term money such as commercial paper, will be done by Treasury. The banks will raise funds typically from the perspective of liquidity management. So they may borrow under repo, market repo, and other options such as certificate of deposits through which they can raise capital. Asset qualification requirements in terms of various heads that banks maintain it, such as held till maturity, available for sale, held for trading. Such kind of segregation is not there in corporate, especially from the reporting perspective. And in banks or financial institutions it could be there. So everything on the right hand side is not applicable for financial institutions. Some of them are only applicable for banks. I hope this slide gives you clarity in terms of what is done in corporate treasury versus what is done in the bank treasury. Now we move on to the next slide, which will give you an idea about what's the kind of job that is expected in corporate treasury. You can see here that this is one of the job posts which were placed on one of the portals, and I've taken data from there. It says that primary objective of the role is to manage treasury operations monitoring, fund balances, preparation of cash flow, fund planning, transferring funds within India to overseas subsidiary, arranging corporate guarantees, local bank guarantees. So you can see that various activities related to cash and fund management and fund transfers are something which is expected in this profile. Of course, this is just one profile, right? So treasury is very extensive. So you can see other profile also, which could be different from what you can see. But it's very clear that this profile is expecting fund and cash management, looking at the liquidity position, or what you call as the cash balances, tracking of loans, interest rate related calculations, okay, and various types of accountings which are required in a company with respect to these things, right? So it's a very extensive profile that way if you see, but at the same time very interesting, right? When we talk about career options in banking and financial institutions, so treasury being a very structured, setup, you have front office people who are typically into sales and trading. You have a middle office which is into compliance and risk management. Of course, financial position monitoring and other things are also done by middle office. And back office is more like, operations, accounting, and what you call as data maintenance or management. So this is something where you need to know that where would I like to work, whether I would like to work in front office. Everybody actually wants to work in front office. The reason for that is that front office is typically very glamorous. You have money to manage. If you are a dealer, you will get X amount to trade for, make money out of it. Whether you make money or not, that's a secondary thing, but at the outset it looks very glamorous, right? Middle office basically deals with the risk management and compliance related activities predominantly. Not, I'm not saying that that's what they do, and that's why you need to have skills, especially with respect to market risk, when you are planning to work for treasury. And back office is an unsung hero, still a very good role to be in, because you will be reconciling typically what has been done in the front office. Now, in terms of what kind of roles you can expect in banking and financial institution treasury, you can be a trader, which means you are sitting at the trading desk. You have trading systems, you can access them and trade in them. So there could be trading systems which are third party trading systems, or there could be trading systems which are meant to record OTC transactions, right? So you have the role of a trader. You can be in sales in treasury. Sales is a very important function in treasury. Treasury products and services are offered to various clients by the sales team, right? You can be in the risk management, as I said just now. So typically credit and market risks are focus areas in treasury. Credit risk would arise when the investments are done in corporate bonds. Okay, government bonds do not have credit risk, but more so it's the market risk that matters from treasury's perspective. You can be back office professional. I mean, slightly not that kind of a glamorous role that front office is. You can be a compliance manager, which means you are looking at risk and compliance either together or separately if it's a bigger setup, right? You can do technology related jobs. Please remember that in treasury, technology has become very important today. In fact, technology is something where there's a lot of scope, because treasury services are extremely technology driven. And then you have functions like audit. So treasury audits are very what you call as technical, because the circulars that Reserve Bank of India issues in treasury sometimes leave scope for multiple interpretation, and that's why the job of auditor could be very challenging. But let me tell you that these are not just the roles that you can aspire for. There could be many other roles which I will probably cover in subsequent my video, right? Now let me quickly take you to the next slide, which talks about what are the products that you need to understand. If you want to be a treasury champion, what do you need to understand? You need to understand fixed income securities in detail. Typically people know less about fixed income securities, and it's a very extensive world, right? You need to know about foreign exchange, which is what many treasuries, whether it is corporate or bank, handle. Equities, not that much, but you need to know a part of it. You may, in some of the treasuries, you need to evaluate a company for IPO and applications at that time. Derivatives is a emerging area, and there are many transactions which are happening: interest rate swaps, forward rate agreement, all those transactions, and bond forwards. Okay, all those transactions have to be understood by the person who is in treasury, especially in a banking treasury. And you also need to know short-term instruments such as in terms of a banking, you need to know call money, repo, reverse repo. You need to also know about certificate of deposit, commercial paper, interbank lending, borrowing. These are some of the nuances that you need to understand, right? Having said that, let me also tell you that what kind of qualification is required if you want to be in treasury. And this is not in the same sequence. You need to be basically a finance person with a strong orientation and understanding of finance. You can be an MBA finance, you can be a CA, chartered accountant, a CFA, an FRM. You can be also an MCOM with a very strong understanding of the finance and working of treasury. You can be also MA in economics, because economics people also understand especially the market part of the treasury function, so they can also be there. And other qualifications are also acceptable with experience. So in many companies, especially in nationalized banks, you may be recruited as a probationary officer having some other degree or qualification, and there may be a job switch because of which you may end up being in treasury. Through internal job postings also in many companies this can be done. Now we move on to entry options that you have. You can directly enter if you are an experienced professional. There are advertisements which are placed in newspapers, websites, and other places. Uh, if you are, a person who is a fresher, typically, you will be able to enter only through campus, not otherwise. And if you have the experience and inclination, then through internal job postings also you can do the entry. Remember, you need to have right skill sets and knowledge. Both of them are required. Qualification also matters. It's not that it does not matter, but skill sets and orientation is very, very important. I hope this video made some sense for you. If so, please put your comment at the end of the video. You can also I would request you to like this particular video and subscribe to the channel, and do write to me if you want me to cover anything else related to treasury on healthofmywealth@gmail.com. Thank you.